Introduction. Have you ever felt like investing is some secret club meant only for Wall Street elites or people with fancy degrees? Maybe you've looked at terms like dividends, mutual funds, or ETFs and thought, I'll never understand this. Well, here's the truth. Investing is not only simpler than you think, it's actually easy once you know the steps. Imagine this. You're sipping coffee, checking your phone, and your investments are quietly growing in the background. No stress, no confusion, just steady progress toward your financial goals. That's what's possible, and today I'll show you exactly how to get there in this video. We'll explore everything from developing the right mindset to understanding investment basics like stocks, bonds, ETFs, mutual funds, and real estate. We'll dive into the psychology behind why humans make investing harder than it should be, debunk common myths, and I'll give you a step-by-step actionable guide so you can start investing today. Plus, I'll sprinkle in real-life stories of ordinary people who started small, stayed consistent, and ended up seeing amazing results. By the end, you'll see that investing isn't intimidating, it's empowering. So, are you ready? Let's dive in. Before we start, I want you to think, what's your biggest fear about investing? Type it in the comments. I'd love to hear the mindset of an investor before we even talk about stocks or bonds. Let's tackle the most important part of investing, your mindset. The biggest barrier to investing isn't money, it's fear. Fear of losing money, fear of making the wrong choice, fear of starting too late. But here's the secret. Not investing is riskier than investing. Inflation slowly eats away at the value of cash sitting in your bank account. That $1,000 you have today might buy significantly less in just a few years. Meanwhile, even a modest investment can grow faster than inflation, protecting and growing your wealth over time. Consider Sarah, who kept $5,000 in her savings account for 5 years. She thought she was being smart, but due to inflation, her money lost value. Meanwhile, her friend Jake invested the same amount in an index fund, and today, his $5,000 has grown to $7,500. The difference? Mindset. Jake focused on long-term growth instead of short-term fear. To develop the right mindset, start by accepting that risk is part of the process. Every investment carries some level of risk, but avoiding it entirely can cost you dearly over time. Think long-term investments grow slowly, like planting a tree. You water it, give it sunlight, and eventually it bears fruit. Start small. You don't need $10,000 to begin. $50 or $100 a month works perfectly. And be consistent. The magic of investing isn't timing the market ties in the market. Quick exercise on a scale of 1 to 10. How scared are you to start investing? Type your answer in the comments. Recognizing your fears is the first step toward overcoming them. Breaking down the basics now, let's simplify investing. You don't need to memorize hundreds of options. The basics are surprisingly simple, and once you understand them, the rest becomes intuitive. First, we have stocks. Buying a stock means owning a tiny piece of a company. When the company grows, so does your investment. Think of it like buying a slice of pizza. If the pizza grows bigger, your slice grows too. For example, Apple stockholders from 2010 have seen over 1,000% returns by staying patient and consistent. Next, we have bonds. Bonds are essentially loans you give to companies or governments in exchange for interest. They're lower risk than stocks, but usually offer lower rewards. Think of it like lending money to a trusted friend who promises to pay interest. Then there are mutual funds and ETFs. These are collections of stocks and/or bonds, so you don't have to pick individual companies. Professionals do it for you, and this diversification reduces risk. Take Mark, for instance. He started investing just $100 a month in a diversified ETF 10 years later. Without stressing about daily market movements, he had over $20,000 in his account. The key was consistency, and letting compounding do its work. Real estate is another option. Buying property to rent or sell at higher value can be very profitable. Maria bought a small apartment, rented it out, and over 5 years, the property value increased by 30%. Real estate can provide steady income and long-term growth, especially when combined with other investments. Finally, there are crypto and commodities. These can offer high rewards but come with high volatility. Only consider them if you understand the risks. Which of these investment types excites you the most? Stocks, bonds, or real estate? Comment below. I'm curious to see your choice. Psychology of investing here. As a truth many beginners overlook, the hardest part of investing isn't math, it's your mind. Behavioral finance shows that humans are wired to react emotionally to money. Fear, greed, and overthinking often lead to poor decisions. Fear can make you sell when the market drops. Greed can make you buy during hype at the worst possible moment. And overthinking can cause paralysis where you do nothing at all. During the 2020 market crash, many investors panicked and sold their holdings at a loss. Meanwhile, those who stayed calm held their investments and recovered quickly as the market rebounded. This highlights the importance of emotional control in investing. Some common psychological traps include loss aversion, where losing money feels worse than gaining money feels good. Herd mentality, where following the crowd can be dangerous. And overconfidence, believing you can predict the market perfectly. The key is simple: slow down, breathe, and stick to your plan. Your long-term self will thank you. Have you ever made an emotional investment decision? Share your story in the comments side. Love to hear it. Comment. Myths and misconceptions. Many myths make investing seem intimidating. One myth is that you need a lot of money to start. In reality, many apps allow you to begin with as little as $5. Another myth is that you have to time the market perfectly. Timing the market consistently is nearly impossible, so focus on time in the market instead. Some people think investing is gambling. It only becomes gambling if you act recklessly. Smart investing is informed, diversified, and patient. Another misconception is that you need a finance degree. You don't. Basic knowledge, consistency, and patience are enough to succeed. Jessica thought she needed $10,000 to start investing. One day, she tried an app that allowed her to invest $25. She started small, learned along the way, and now invests $500 a month. Small beginnings grow steadily. And that's the power of starting. Step-by-step guide to start investing now. Let's get actionable. Here's a simple step-by-step guide to start investing today. Step 1. Set your financial goal. Are you investing for retirement, a home, or building wealth? Step 2. Build an emergency fund of 3 to 6 months of expenses. This prevents panic selling when unexpected events occur. Step 3. Choose the right account: brokerage, retirement account, or a beginner-friendly investment app. Step 4. Decide on your investment type. Start with ETFs or index funds, which are beginner-friendly and diversified. Step 5. Start small and be consistent. Even $50 or $100 per month works perfectly. Step 6. Automate contributions. Out of sight, out of mind, while compounding does its magic. Step 7. Review periodically, but don't react to every market movement. Monthly or quarterly check-ins are enough. Common mistakes to avoid include chasing trends, over-diversifying unnecessarily, or panic selling during short-term market drops. Alex started with $100 per month in a diversified fund, automated his contributions, and didn't touch the money for 10 years. Today, his account has grown to $30,000, proof that consistency and patience win. Advanced tips and strategies. Once you're comfortable with the basics, consider these advanced strategies. Diversify across stocks, bonds, and real estate to reduce risk. Understand fees, as low-cost funds outperform high-fee options over time. Think long-term and avoid chasing short-term trends. Dollar-cost averaging investing fixed amounts regularly smooths out market fluctuations. Also, take advantage of tax-efficient investment accounts to maximize growth. Even advanced investors often start small. Stay consistent and leverage compounding over time. The key is patience and informed action. Encouragement and motivation, the easiest step is the one you take today. Start small, be consistent, and let time work its magic. Daily habits like reading 10 to 15 minutes about finance, tracking spending and savings, and reflecting weekly on progress can reinforce your investment mindset. Imagine being 10 years from now and realizing you built wealth without stress. That's the power of easy investing. Write one sentence below describing your financial future 10 years from now. Conclusion outro to recap. Investing starts with mindset, not money. The basics are simple stocks, bonds, mutual funds, ETFs, and real estate. Psychology matters. Don't let fear or greed control you. Don't let myths hold you back. Start small and stay consistent. Action is key. Set goals, automate contributions, and let time do its work. If you've been waiting for the perfect moment, this is it. Start today, even if it's just $10. Investing is easy, actually, once you know how. Thanks for watching. Like, share, and subscribe if you found this helpful. And remember, your future self will thank you.